Good morning, everyone, and welcome to Next Gen Payments Cross-Border Innovation. I'm Dr. Angela Murphy, Vice President of Marketing and Solutions at a company called Pigeon, and I'll be your host and moderator for today's event. With nearly a decade in the payments and fintech industries and many more years of public speaking experience, I am excited to be here with you all and to share in these conversations. We're coming together at a time when cross-border payments are moving higher up in the strategic agenda for businesses across the ecosystem. Expectations around speed, transparency, interoperability, customer experience, and compliance are all rising at once, and organizations are under real pressure to modernize how money moves across markets. This is exactly what today is about. This event has been designed to give you a practical view of where cross-border payments are heading, what innovation is actually delivering in the market, and how leaders are thinking about building payment systems that are more efficient, resilient, and future-ready. Over the next few hours, you can expect a focused and practical conversation. We'll begin by looking at the bigger picture of cross-border innovation and the forces reshaping the space. From there, we'll move into a deeper discussion on how new technologies, infrastructure models, and smarter payment strategies are helping organizations improve speed, visibility, and operational performance. We'll also hear directly from the industry leaders on how AI, automation, orchestration are all influencing the future of cross-border payments, not just in theory, but in real execution. So whether you're joining from a bank, a fintech, enterprise, or payments technology provider, the goal for today is for you to leave with clearer insight into the direction of the market, the practical opportunities emerging now, and the questions organizations need to be asking as they plan their next steps. I also would like to offer a sincere thank you to our technology partner, Paystand, for supporting this event and for their role in helping advance modern, scalable payment information and innovation. And of course, thank you to TechSommet for bringing this community together. Please keep sharing your questions in the chat throughout the sessions because the more interactive this is, the more valuable it becomes for everyone. And at the end of each session, just so you all know, there will be 5 minutes for Q&A, and we'll be monitoring those in the Q&A boxes throughout the sessions this morning. So with all of that said, let's get started. Our first speaker has spent his career at the intersection of payment strategy, analytics, and global commerce, helping shape how payments work at scale. Please join me in welcoming Ajay Matthews, Payment Strategy and Analytics Leader. With experience spanning payment strategy and analytics across leading digital commerce environments, Ajay brings a highly practical view on where cross-border payments are heading next. In this session, he'll share how the industry is moving beyond legacy payment models toward a future built on data, interoperability, and modern infrastructure that can support faster, smarter, and more seamless global value exchange. Ajay, welcome to the session today. The floor is yours.
Hi Angela. Could you please switch on my video?
Ajay, you have the access to turn on your video, please.
It says you cannot start your video because it's disabled by host. If you could check. Okay, perfect. Thank you. Great. Thanks, Angela, for the brief introduction, and thanks, TechSommet, for giving me this opportunity to present my views and thoughts and like what I have been doing in the industry for like over 13 years, I would say. So yeah, I'll keep it brief and would let uh, folks to like dive into like questions if any, and then yeah, let's get started. Let me know once you are able to see my screen.
Yes, we can.
Yes.
Right. Awesome. Great. So yeah, just to give you a brief introduction, I've been in the global payment ecosystem for over 13 years now, across multiple companies, wearing different hats. At eBay, what I've been doing is looking into the payment strategy and analytics function and looking into how to bring new forms of payments. We have been using like credit card, debit card, all the card formats, PayPal for that matter. Now, what's coming up is like buy now, pay later or pay by bank ecosystems. And then how do I reduce cost when I'm using each of these different payment methods? At PayPal, I've been doing primarily two things, I would say, like looking into the checkout ecosystem and optimizing that purely from a data perspective and creating actionable insights so that like we can enable the customer with better way of payments and completing their transaction. In addition to that, I've been working with like all the top global merchants or customers or strategic accounts, whatever you might call them, to look into like what are their pain points in payment ecosystem. How do they enable a user with a better payment option so that like the transaction is complete? And what I have been like very keen and focused is into looking into the future of payments, like where should we be going? And one major roadblock or opportunity is cross-border payments, right? It has been there. We have been doing cross-border payments, and now it's more and more exciting as the world comes together into this future of payments. So yeah, like looking from like I would say like I've been fortunate to be working with like these great companies to have that eagle eye view of what's happening in the payments ecosystem, how the payments ecosystem have been evolving in the last, I would say like 10 to 15 years, right? Like from very slow transaction, high friction gateway system to like moving into where we are now is like trying to use real time payment option, expanding on like our cross border abilities and API first global commerce. And what are my lessons from like my past experiences? Trust is a primary currency in the cross-border trade, right? Analytics has to be front and center so that we move away from being reactive to being very proactive on like how do we predict what data should be coming in, who would be using the payment method, and how the transaction should flow in. Interoperability is a very big competitive advantage, and we have to move as quickly as possible to get there. And then two important metrics that I have been focusing on is authorization rate of a transaction and cost of payment. How do I make sure that the authorization rate is the best in class? At the same time, I'm not losing money on the table. How can I reduce cost for each and every transaction? Every payment method have a different transaction cost. And today we'll be looking into this paradigm shift, like how we have to move from a slow, siloed legacy uh, bank transaction to a maybe more instant, decentralized, a data-rich payment network. And as we talk about this ecosystem, everyone is has equal share, right? Like starting from a customer to the payment processor, PSP, network, issuing bank, decentralized banks, and like definitely like compliance and policies, and then finally the merchant themselves. Looking into the landscape of cross-border ecosystem, right? Like what we are predicting, and these are like very, I would say like we are predicting somewhere between 210 trillion to 250 trillion by 2027. Uh, and we are moving towards that. And how do we get there? How do we make sure that we enable this ecosystem to be like able to uh, promote the transaction? We know that like in the cross-border trade, like majority or like a significant portion of the transaction gets declined just because the trust factor is missing. So how do we get there is what we will be talking uh, towards the session. So the efficiency frontier, right? Like, so how do we reduce the fragmented standard manual compliance checks with high transaction cost? A lot of these things are not transparent at all, and there are like significant delays in each of the steps that starts from like a customer's account to going into the PSP network, banks, and then coming back to the merchants. It usually takes like somewhere around 3 to 5 days to complete or settle a transaction. And in what we are going towards is a next gen solution where we are telling like how do I use the API first architecture, use decentralized DTL like distributed ledger technology for settlements, cloud native clearinghouses, and enable straight through processing and transparent pricing. This is a very important and like interesting number, right? Like, and how we have been moving in the past, I would say like 15 years to where we are now in terms of capability is huge, right? We are talking about 80% reduction in cost just by using blockchain. Are we there yet? Are we using it? No, we aren't. So we have been like using this traditional Swift methodology for payment transaction remittance and paying close to like 6% to 10% on an average. And then currently for most of the transaction in the checkout ecosystem, we use like real-time payment rails and like are able to reduce the cost somewhere between like even 1.5% to 3.5%. And it's a huge range of fee structure, but where we have to head to is like subpar of 1% to say like can I use a blockchain technology to get there, and what is stopping us from going there, right? Like, and if you look at these two comparables, we are talking about like the legacy friction, where definitely the fees was much higher, the settlement was like three, as I said, like 3 to 5 days. You don't have the visibility on like at what stage of the process of transaction settlement are we at. Again, a lot more of manual compliance checks, where we are targeting to go, and like we'll be talking throughout the session today. How do we get to a place where we reach the transaction cost to sub 1%, real time clearing or instant even atomic settlement and transparency? And how do we embed the compliance ecosystem, bring in AI to do that compliance checks on that end? And these are the pillars where we need complete focus on. How do we interoperability, right? Can I use a better messaging system so that like the delay is reduced? Real-time settlement. So usually what it does is like for auth, it takes like somewhere around 1 to 2 days. Then you have another 1 to 2 days for settlement. It takes like somewhere between 3 to 5 days to for the merchant to see real money in their account. Can I move faster? Can these things be instant? Technology wise, yes. If I use a blockchain technology, we can reach there, but then is it scalable? At currently where we are sitting, uh, what we are seeing industry wide is like the problem why it is not being um, I would say like adopted is because it's not scalable in many fashion, right? Like we can do and save like these transactions, but then do we have backing from the government and compliance to say like okay, if what happens if a failure is there, right? So these are some of the things that we might have to solve. And for that, we would need like central bank digital currency, like for programmability perspective, stable coins, smart contracts, and automated value transfer, so that like we are there to develop that framework and enable the transactions. One of the primary or like very important levers is analytics, and like this is not the age old reactive analytics what I'm talking about. What I'm talking is like being proactive, predicting how much of liquidity is present across the global banks, fraud detection even before uh, the transaction begins. How do I detect that whether this consumer is going to use a fraudulent way of payment, or like are they in good standing? And analytics would be a enabler how we go into uh and that's the success of payments, right? It's not about volume, it's about how much of information. And like uh again, like where we stand today, there is lot of data. Is this data, how do we use data to get better is the question, right? We are not in scarcity of data, like in all ways. It is like we have more data than required, I would say. But how do I segment, take the right signals, look at the data properly to make sure like I have intraday liquidity optimization. I am using uh, intelligent routing logic, if possible, AI driven, to select the path where I can get the lowest cost, but at the same time, I'm not giving away on speed, I'm not giving away on authorization rates. I want each transaction to be successful, but at the same time, I want the cost to be lower. And if we are able to achieve this, where we can get to is like we can set up a personalized fee structure for merchants as well as uh, consumers, right? We don't have to penalize folks just because the industry is not doing well, because just because our ecosystem is not there yet, our technology is not there yet. What I'm doing is like I'm averaging out on fees, but can I do better? Can I, if Ajay is a fraudulent transactor, I increase his fees. If Ajay is a good consumer, then I reduce the fees. So what are the ways to get there is what the analytics as an enabler will do. And this is how we have to be evolving. As I mentioned, like messaging, move into a more rich XML based reality or IXO um, standards, from where we are in like currently is tech standards. Corresponding hubs, like can we do interlink real-time payments using distributed ledger technology? Yes, we can. How fast we can get there is the question. Settlement, currently everything happens in batches. Can I do real time? Again, identity is a very huge issue. Currently, every one in the ecosystem looks at the identity and tries to approve. Can I have a more digital ID framework? Can I have verifiable credentials so that like, and it's transparent across the ecosystem? And when I say that, like across the merchant, PSPs, networks, and banks. And here is the path to ubiquity, right? Like where we are now is like we are have already started adopting the ISO standards, RTP hub connectivity. By next year, we already have like stablecoin adoption for B2B settlement, but then it's not at scale. How can we bring in institutional stablecoin adoption so that like every big huge merchant is looking into like using stablecoin to reduce fees and increase the speed of payments? Um, the next would be like interlinking an atomic asset exchange. And from there, like what the future should look like is invisible payments, right? Like I come into a grocery store, uh, you know who I am, and I just have to like scan my things and like walk away from the store. Can I get there? Like, yes, in terms of technology, in terms of adaptability, we are not there yet. And finally, we will be like in a space where like the future of cross-border value exchange is ubiquitous. The payments are invisible. So money has to move the way data is currently seamlessly moving, right? Like we have put our checks and balances across data, whether it's compliance, whether it's risk, whether it's payments to move. Why are we not able to move money as we are able to do data? So that is somewhere we have to get, and we will be there soon. I'm watching for that. Um, Thank you.
Thank you so much. That was a really valuable way to frame the conversation and to set the tone for the rest of today's event. I know that I really enjoyed hearing your remarks. We have a few minutes now for audience questions, so let's turn to the chat and pick up a couple that build on what we just discussed and heard about. The first question is, as payment rails become commoditized, do you think payment providers will increasingly compete on analytics and value-added services rather than transaction processing itself?
It's a great question or like way of looking, right? Like definitely what we are seeing is like there is healthy competition in the payment ecosystem. And it's more on like who is there before others are reaching, right? And like the way to get there is like by using the data, right? Whether it is analytics, whether it is AI. For AI, things have to be more cleaner. And then what people should be focusing on is how do I reduce friction on the day-to-day purchases rather than like fighting on like smaller things and like looking beyond and saying like okay we have to be driven by the vision on like where we need to be getting rather than like trying to focus and like get the industry or like getting most of the industry. Like if I have to talk about cross-border transactions, like we are looking to uh, be processing like 250 trillion dollars of transaction in a year next year. So do I go and like catch the bigger pie, or like do I develop the technology so that like that pie comes to you?
Yeah, that's a great answer. Thank you. And we do have time for one more question from the chat before we move on to our next speaker. The question is, which regions do you think are setting the global benchmark for cross-border innovation today, and what can other markets realistically learn from them?
Amazing. I kind of like I think mentioned, but then it was not very clear. Like, so there are these emerging markets across globe where like who are doing great in terms of technology and like and it's across like I don't want to name a few countries, but then it's across Europe, it's across Asia, it's across LATAM, where there are like new innovative ways, and it's happening because they don't have accessibility to the old way of doing transaction, right? Like they don't have enough support, so they come up with like very innovative methodology. And we see like a lot of technology development in the payment ecosystem. Like for example, UPI is one of them where they have cracked like how do we manage to send transaction instantly, and at the same time like the ecosystem is not disrupted, right? And there are like things like installment which is still working in like LATAM and like, but then what we see across the board like 10 years back, I would say like nothing was mobile first, but now majority of the transaction everyone is using a mobile phone to complete the transaction. It's that easy. So how do I use the technology? And as I said, right, like a lot of the technology is already available uh, in the market. How do I use it to make sure like the transaction is risk free and fast, cost effective with highest approval rate.
Wonderful. Well, thank you so much for spending time with us this morning and sharing your thoughts. And I'm sure the audience is joining me as well in thanking you for your time as we get ready to welcome our next speaker.
Thank you. Thanks, Tim.
Our next speaker is Meredith Perry, a startup leader focused on new market creation who currently leads new business initiatives and ecosystem growth at Paystand. From being one of the early sales leaders at Tesla to driving leading business development across fintech SaaS companies, including Paystand, Revel Systems, and QuickTime, Meredith has built her career around helping disruptive products go from 0 to 1 and finding their place in the market. In today's session, Beyond Faster Rails, Building the Execution Layer for Cross-Border B2B Payments, she'll explore what it really takes to make next-generation payment rails work in practice, from controls and compliance to ERP integration, treasury logic, and reconciliation. Meredith, welcome to the session. Thank you for your time this morning, and the floor is yours.
Thank you so much for having me. Let me see if I can share my screen so that we can get started here. All right, are we thumbs up?
Yep.
We can see it.
Fantastic. All right. Well, welcome everyone. That was such a great introductory conversation because I'd love to build on that and talk about the execution layer. So when we think about payments, the first thing that comes to mind often is the rail, that kind of execute or the rail that's actually taking that payment, whether it's RTP or bank rails, maybe future stablecoin rails. And that is the way that that payment traverses that last kind of step. But when we think about B2B, something that makes it a little different from maybe some of the other payments that take place, even in the retail or institutional world, is there's a lot of context around that payment. It's a whole workflow that is associated. It is policies, it is approvals, it is requests, it is data around the invoice. And so what we'll talk about today is the execution layer is really critical for making sure that B2B can adopt those cross-border payments. And especially as we transition into an AI age, that becomes a critical harness for trust so that we can execute these payments with confidence. So I think we're all excited about the prospect of making payments faster, taking processes that may take a couple days down to seconds, or taking costs that have been inordinate and making it affordable. But the reality is there are many examples of times where faster or more affordable rails are available, and yet they still are not adopted. So faster rails are necessary. Innovation and these new technologies are going to make faster payments capable, but that doesn't mean they're going to be usable. That doesn't mean they're going to be adopted. So we have to talk a little bit about what else is necessary to make this usable in a day-to-day basis for businesses. So we think about kind of the improvements that can happen across the rail for the value, but there's still steps that are going to be manual in the process. Did the invoice come in through the same way? Are there exceptions that may be different in cross-border use cases that need to be considered or researched before a payment can be released? What is the accounting and reconciliation records for these cross-border payments? Or are they going from different bank accounts, and how does that affect my accounting records? So as you can see, the rail is a critical piece of it, but there's many other components that need to be considered in the course of a cross-border payment. So rather than thinking about it as just a single payment or a point payment, we like to think about it as an entire event, an entire business event. It has several states that go from request to approval, to maybe a secondary approval or some rules around kind of cost handling, and all the way down to reconciliation in the ERP. Each one of these steps may have automation or intelligence around it that helps you decide how to tag it or who should approve it based on the context. For example, a particular invoice with a certain PO may need approval from one team member, and a different invoice or product may require approval from a different team member. How are we routing those in the process? So just like we think about a payment no longer as just a point payment, it's an entire event. The huge opportunity for businesses is thinking about all of the layers around that event and how we can automate them together. So when we think about programmability or the future of AI executing payments, you can almost think about it as having categories or layers. Step one is what's supposed to happen here? Who approved it? Was it in policy? Step two is maybe some of the logic around how it's supposed to be handled, audit trails, how it should be reconciled. Then we think about, well, routing actually. Which rail should it go over? Which provider or which cost structure or which method should the payment actually take? And then last, of course, is how are we recognizing this outcome in our accounting system? And I think that that last step in getting these records into ERP is absolutely critical. All these things start and may add on during the course of a payment, but at the end of the day, all of these components need to be in the record system so that when you're later looking at the events and understanding and reporting on them, you're not having to go do research or assemble them after the fact. So this idea of an entire object or a record around that payment is really the product that B2B needs for faster payments, for cross-border payments to become completely automated. That context, that meaning, has to travel with the payment. Otherwise, if it drops off, someone has to still pick up all of those components on the other side, right? So I think starting to think a little bit about, well, how do we go about implementing or how do we go about applying this concept of an object and all of the context around it? We think about this day and age, I think you're starting to hear a lot of AI terminology in terms of loops or harnesses. That a lot of those have parallels in the payments world. So when we think about, well, how do I adopt a faster rail or a new process? We want to think about that workflow wedge. What is kind of the end-to-end motion that needs to happen, starting very small, starting in a very repeatable way, where I can almost create a sequence of repeatable events that we can then think of as a loop. And that's how we think about kind of an entire workflow around a business payment. Stable coins are starting to become enterprise infrastructure in this way, and then they will carry this idea of programmability or context and rules and records associated with that payment as it transfers. So at the end of the day, these other components, let's say an entire envelope can arrive. It's not just the money that arrives in the account. It's the payment that arrives with information about who paid it, what it was paid for, what products or services may have been included, whether any products or services were rejected from the original invoice and may have a markdown associated with it. What was the counterparty or what was the compliance information? When that entire package can travel and arrive at a destination, the sender and receiver have all the information they need to be able to integrate and update their accounting systems of record. Even today, if we look at non-cross-border or non-blockchain rails, there are many examples of payment moving separate from these exact components, right? And if I receive just a check in the mail, my team would have to go back, not only bring that check in, but then attach manually all the components associated with those steps into the accounting record. I think the really exciting opportunity here is with ERP integration and with context, moving with these payments, you truly can automate all of these records and suddenly improve the transparency and visibility around payments. These concepts of rules are actually going to be what makes it possible for AI to execute more payments on our behalf as well. We think about, when we think about a business workflow, many of the steps that we talked about here, from ingesting to approving, those steps are not the actual last execution itself. They're all of the trust components. But in order to delegate, in order to allow AI to make actual payment decisions in the future without necessarily a person looking over their shoulder, or that last mile of oversight, it's all about building these contexts and rules into the payment so that it can execute according to those rules exactly. Think of it almost like that harness in the AI world. If you're using your Codex or your Claude, by creating the right limitations or constraints, the AI knows when it has the context to execute within the pre-approved rules, and it can take the actions while not doing anything above or beyond that payment object or what is kind of previously determined or allowed by policy. So then we kind of think about we shift from kind of theory to practicality, which is, all right, well, where do I start? How do I begin with thinking about automating or using AI to execute payments on my behalf, especially in a cross-border context? Well, I go back to this idea of finding that single workflow, that single wedge. Tends to make sense to start in one of the highest friction or kind of most challenging areas, which is why cross-border is such a natural way to start thinking about AI and AI-generated payments. So if you start with a single corridor, a single repeatable workflow, and you step through kind of the compliance requirements that are needed for that, your own internal approval requirements or policies that are associated, and those reconciliation rules, looking at the entire context around that will allow you to then automate kind of the end-to-end flow for that one loop. And then as you get confidence in running that pilot again and again, you can add new loops or more complexity to the loops, maybe more rules or more deterministic cases that you need AI to solve for you. And by building those loops over time, you can start to get many cross-border corridors and eliminate not only the manual steps of paying, but of reconciling and approving in the process. So kind of in summary, maybe I'll provide you a challenge or a charter, which is to say, pick one of your corridors, look at the end-to-end workflow, and prove that you can, automate every one of those steps with that payment being the last kind of piece of the process. So it is not just about the payment, it's about everything else around that. And as we watch finance teams transform in the coming months and years, being able to enable teams for the end-to-end will consider all of these components. Thank you very much. I think, Angela, I don't know if you would like to open the floor for questions or.
Yes, I absolutely would love to do that. Thank you so much for sharing your expertise with us. So I have a couple of questions actually, and we had one come in through the chat as well. So I think two of these are actually going to kind of go really well together. The first one is from the chat, and it says, a lot of enterprises are still investing heavily in ERP modernizations. How do you convince a CFO that investing in an execution layer provides a better return than simply upgrading the payment rails?
It's such a good question, and I feel like it can be very difficult because the conversations are different in are very different in each organization. But at least, for ERPs are incredibly valuable in terms of the data that they carry. But I would tend to frame it as ERPs are often what makes them so good at solid, reliable accounting is the very thing that makes it harder for them to be adaptable to innovation. And so separating this idea of the ERP being the record, but still needing to innovate, whether it's the rail or whether it's the workflow, I think both of those actually need to be considered in an end-to-end transformation of the B2B payment. But I think maybe a little bit of education about what is an ERP and what does it do, and where should the investment go? Should the execution go into the operating layers? Or should the execution go? I mean, how much better can the records be? You're actually going to get better data, cleaner data, and more ROI by considering how to improve the data coming in and make it clean when it arrives rather than always cleaning it up after the fact.
And a bit of a follow-up to that question, actually, in terms of an execution layer, what does that mean in practice for finance teams, for banks, fintechs? Because I know you talked about a couple of different layers, ERPs being one of them, operational layers being another, but the execution layer, what does that look like end to end from your perspective?
It's a great question. I think of it, if I were to put it in a single word, I'd just say what gives that payment trust? What makes it the finance team know that it was correct, it was within policy, and they're comfortable signing off or putting their name on it. So usually there are several steps in an execution layer, right? My vendors were onboarded and I have all the compliance requirements that I need in documentation, check the box. Um, Approvals often being a step of that, right? So at the end of the day, the execution layer is everything that needed to happen for you to feel the payment happened correctly.
Great. Thank you so much. And I had another question. I'm also still monitoring the chat if others would like to join in the conversation. We do have time reserved, as I said earlier this morning, for Q&A for each individual session for about 5 minutes towards the end. So please feel free to jump into the Q&A box if you have other things that you would like Meredith to clarify. And the second question, or I guess now it's the third question that I have for you, Meredith, is around stablecoins. I don't think anybody can go anywhere in a fintech or a payment ecosystem and not hear this word come up, whether it's stablecoins or tokenized deposits. They're really getting a lot of attention right now. And I'm definitely seeing that in my work. Where do you think that they create real enterprise value first? And what has to be true before companies can safely use stablecoins in production?
They're great questions, and I have a particular point of view about this, having lived very deeply in kind of the day-to-day workflows of teams. Um, my personal view is if we look at stablecoins, they've already gotten dramatic adoption across retail cases and even across institutional cases. But there's one black hole. It's B2B. B2B still is not coming online as quickly as I think maybe some companies or some people would like for the exact reasons of this presentation until it's almost embedded within the rest of the operations of the business. It's more burdensome for the finance team, right? I don't need to set up a whole nother rail with a whole bunch of manual steps in the process. So our point of view, my point of view, even of the company is we need stable coins. We need a stable coin that carries all these pieces with it. And then the integration to the ERP, then the records almost happen automatically. There's a little bit of almost, we'll call it almost a protocol of adoption. We believe that when people see these components attached, it will become practical, easy to integrate, and stablecoins will hit a huge inflection point in B2B use cases. And that's something that we are very excited to be a part of making possible. But the simple answer, Angela, is finance teams won't want to introduce more risk. Maybe it will solve point cases until that point in time, right? It's if cross-border is difficult enough, it's so much better to have a separate workflow, but then, to build that workflow around it. But if we want to see stable coins enter and fully replace the kind of day-to-day rails like an ACH or bank to bank, it really will need to it will need to not increase complexity or friction for the finance team and therefore sit seamlessly within everything in the workflow.
Great. And that goes really well with the next question that we just received from an attendee. From your experience, what do finance teams care about the most when they're evaluating new payment solutions? Is it cost savings, speed, compliance, visibility? Where do you see that all falling in terms of rankings and priorities?
I think it really depends on the pain of what they're struggling with. Certainly in cross-border, the transparency is one of the biggest challenges or pains I see finance teams struggle with. I sent this payment into the ether. My supplier doesn't know when it's going to arrive. They're sending me 5 emails in the meantime. Everybody's wasting time on the back and forth. How do I increase visibility and transparency in the cross-border case? Obviously, cost is a huge component with cross-border as well, and a huge area that payment innovation is going to bring down costs dramatically, as AJ said. But yeah, different industries have very different challenges. Whether it's disagreement about that metadata, whether it's having to audit or check back. So there can be a lot. It really is context dependent, and I'm happy to tuck into it in another session for anyone who's interested, or they're welcome to contact me. But yeah, it just depends.
I have seen that in my own work and experience on instant payments, generally speaking, in the US context, where two of the most common use cases that we're seeing in instant payments with a kind of receive first ideology that we have now in the States is digital wallet offloading. And I've been seeing it cannibalize wires as well because it's just doing instant payments and using, stablecoin or a tokenized deposit to move that money has better context and it's way cheaper than a wire. So it like puts kind of the best things that you need in a payment, which is speed and then transparency, and then you triangulate that with it being cheaper. I definitely agree with you that B2B is going to be a big use case for stablecoin and just for everything that you talked about today in context. Um, I don't see any other questions in the chat. I know we have a panel session coming up shortly. Meredith, how can people find you?
Uh,
LinkedIn,
yeah,
email?
yeah, LinkedIn. Find me on LinkedIn, or my email is just mperry@paystand.com. Happy to connect on either of those forums. And yeah, it's a really exciting time for payments. I think the team here is a great resource for you at TechSommet and is doing a great job.
Well, thank you so much for sitting down and spending time with us today. I'm excited about the panel discussion that's going to be coming up here in a couple of minutes. Since we're running a little head on time, why don't we take 5 minutes if people want to kind of get settled for the panel session that's about to come up, maybe grab a glass of water for my fellow speakers, and we will reconvene at 11:55. All right, everyone, welcome back. And I am excited to get our panel discussion kicked off. If my fellow co-panelists wouldn't mind joining me here on video. Hello, everyone. So the next portion of today's session is a panel discussion titled From Autopilot to Agentic: How AI is Rewriting the Rules of B2B Payments. Today, we're moving past the hype and focusing on what actually changes when AI shifts from automating payments to making payment decisions on its own. The real questions are where AI creates genuine value, where human judgment still matters, and what it really takes to make this work in production. We have a fantastic group of panelists joining us today, and I am looking forward to a practical, grounded conversation. And now for introductions. Our first panelist is Joe Pascal, a payments operator with deep experience across high-risk commerce, embedded fintech, and payments infrastructure. He leads a payments division across the US and Canada and also founded Ohm Payments, where he helps growth stage companies launch and scale embedded payments programs. Joe, it's wonderful to have you with us. Next, please welcome Paramita Bhattacharya, a fintech executive with extensive experience building payments, identity, and digital banking infrastructure at scale. She leads product for digital banking and the check business line at MyTech Systems and brings a strong perspective on agentic commerce, trust, and identity in B2B payments. Paramita, we are delighted to have you with us today. Our next panelist is our former speaker, Meredith Perry, who leads new business initiatives and ecosystem growth at Paystand. She has spent her career helping disruptive products find their place in the market, from Tesla to fintech and SaaS companies like Paystand, Revel Systems, and ClickTime. Meredith, thanks for joining us again.
Good to be
And
here.
finally, please join me in welcoming Safwan Zahir, a fintech executive with deep experience across payments, digital finance, and financial infrastructure. He has led product and innovation work at global institutions and PE-backed companies and brings a strong perspective on tokenized deposits, digital assets, and the future of money movement. Safwan, welcome to the session today. Thank you for your time.
Thank you.
As we start to dive in today, particularly because this panel is focused on artificial intelligence, you're going to hear in some of the early questions that we're asking that this is going to be more of a nuanced discussion about the role of AI and agentic commerce. There's a lot of other information out there that's more in terms of AI 101, but that's not really going to be our focus today, particularly given the expertise that we have on this panel. What we're going to do now is dive right in. Today, most companies use AI to automate payments. If this happens, do that. Tomorrow, AI is going to be making the decisions itself.
Mm.
Let's talk about what that actually means in practice. So, Safwan, I'm going to come to you first. What are you seeing the biggest difference between the traditional automation and AI that actually makes decisions on its own?
Yeah, so the biggest difference between automating payments is that automated payments executes with rules, and AI-led payments can simultaneously infer, reason, and then operate within risk boundaries. So historically, payments automation has been pretty simple. You receive an invoice, you pay, you either set a card on file and then set and forget in order to pay for subscriptions or billing. But with AI agents, they can now reason, infer, compare prices, research on vendors, even negotiate contracts. So if you're a vendor or a merchant where the inventory is running low, the vendor can, instead of logging into multiple systems, comparing prices, sending emails for information, the AI agent can do that, where the merchant actually gets focused to run his or own business. And we're seeing some good momentum in the space where companies like OpenAI, Visa, MasterCard, Google are all enabling infrastructure for AI agents to pay and enable commerce. And when you have momentum at this scale, scale, consumer scale, merchant scale usually follows.
That's great. Thank you. Paramita, I'm coming to you next. From your perspective, which payment workflows are actually ready for this? What are you seeing in the market?
Yeah, ready now, I would say the high volumes, high reputation, and lower stake decisions. These are exactly where AI returns value and where the risk of an individual error is bounded. For example, the straight-through payment processing on approved counterparties, reconciliation and exception flagging, vendor invoice matching at scale, fraud pre-screening and anomaly scoring, working capital and liquidity forecasting, small dollar value approval routing. But there are still large payment systems that are too risky to be using AI on. For example, the first time large payments to new counterparties, because you don't know the counterparty at this point, and it's risky to use AI there. Anything requiring legal or regulatory interpretation, because you as an organization are responsible for explaining, explainability and all of that. And AI is not there yet completely, specifically if it is like, multi-agents working on multi-pronged decisions. Transactions in highly regulated corridors, super risky. Complex cross-border settlements with multi-party dependencies, high value wire initiation without dual control. And my framing for this would be, the right question isn't can AI make this decision, but what's the cost of a wrong decision and how quickly can we catch and reverse it? Where errors are detectable and recoverable, AI is appropriate. Where errors are irreversible or carry regulatory consequence, you want AI as an input to a human decision and not the final authority.
That makes sense. And Joe, you have a little bit of experience with this, with your background in terms of high risk categories. Anything to add in here?
Yeah, I think Paramita summarized it really well. And I think it's a really great question because, in my work at Blaze, we're high risk across multiple industries and multiple rails. And so we have to be very careful with our agentic workflows. And a lot of this is, because we're a merchant of record model and we have a PayFac, we have to be careful about our payment rail relationships. And so that means keeping risk and chargebacks extremely low while we implement these things. And so when I look at workflows that are don't cause too much havoc for us, those are things like exactly like Paramita said, which are invoice matching, payment triggering, recurring vendor payments from folks that you have a familiar relationship with. And really, this isn't exactly like a payment workflow per se, but just agents handling the reconciliation data. I think that's a really a key point here as well.
Wonderful. And Meredith, I'm going to come to you to kind of close us out here on this portion of the discussion, because what I'm hearing from our panelists is that there are some workflows that are ready, some that are could be ready soon, and some that are definitely not ready. And you talked in your session about the future of B2B payments and in terms of agentic commerce. With your work at Paystand, you're working with companies that are kind of moving from this, it's the workflow's not ready to now it's ready. Where are you seeing the most practical value with artificial intelligence right now? What's working?
Yeah. Well, I think both Joe and Paramita touched on some really great components, but um, where it's delivering the most value we see is when there's, we'll call it this kind of a buzzword in AI, but where it's deterministic, i.e., where I know what the process it needs to run is or know the rules, where human judgment needs to come into play. I think we're not quite there in terms of AI replacing that, but there's so many parts of our day to day where it really follows a very strict pattern or a very strict flow. So deterministic processes, we are able to completely automate those and just take the human out of that. And it turns out those slowed us down quite a bit, and there's a lot of value in that. I think Another another place we're seeing a lot of value is if you have a lot of that data history, that creates the context for AI or for automation. And that could be in several steps in the process. I kind of go back to breaking it down to maybe it's invoice intake, and I intake 100 invoices. Well, if I have the 6 months of data of all of those thousands of invoices, I'm going to be a lot better. AI is going to be a lot smarter at predicting the accuracy of the coding and how it should be tagged in the system, or if approvals, right? The longer the records, the more data and context I have, the more accurate the AI is going to be, in the higher confidence interval, we can start to trust it with more and more or more of the edge cases training.
So, what I'm hearing based on what everybody has shared so far is that AI works best where there's clear data, low risk, higher volumes, and a lot of companies are starting there. I think the harder question is what comes next, particularly as it relates to trust and control. How do we sleep at night when we have these new emerging technologies that are becoming more and more a regular part of our financial ecosystems? The primary issue I see is if AI is making the decisions, how do you know it's making good decisions? And how do you control those decisions? If something goes wrong, who's responsible? I get that question all the time. What's the AI policy? Do we have one in place at this institution? Because in a highly regulated environment, the computer did it isn't a good answer. And I know some of the audience members are probably smiling a little bit right now. In terms of controls and trust, what controls would have to be in place before you trust an AI system with real payment decisions? And Parminta, you talked about this a little bit, but could you expand?
Yeah, sure. I almost look at it as readiness checklist, if you will. And there are five non-negotiables in my mind. So the first is explainability, and that's by default. So every AI decision needs a human readable rationale. You don't have to do it for every transaction, but on demand. But if a regulator asks, why was this payment approved or declined? The answer can be to what you said, Angela. The model said so. We cannot say that, right? And this is embedded in SR 11.7, which is for model risk governance. You need documentation of the model's logic, its limitation, and its validation history. The second one I would say is confidence thresholds with hard stops. So any decision below a defined confidence level escalates automatically, right? And this is not optional. And what I mean by that is you're not running AI to eliminate humans from the loop. You're running it to ensure humans are spending their time on the decisions that actually need them. The third one I would say is monitoring and drift detection. So models degrade, payment patterns shift, counterparty behavior changes. So you need real-time performance monitoring and automated alerts when the model's accuracy profile drifts from its validated baseline. The fourth one I would say is immutable audit trail, as in every decision, every override, every escalation needs to be logged with timestamp, who was the actor, rationale, what have you. This isn't just for compliance, it's also how, we would improve the system. Override data is training signals. So you want to know when humans are disagreeing with the model and why. And last but not the least, the regulatory alignment upfront. So knowing which regulations touch the workflow before you deploy, because for example, if you're deploying any credit element, ECOA, or the FCRA, if you're using consumer data, BSA AML for anything that touches transaction monitoring, UDAP for anything customer facing, and there are multiple of these. So the legal and compliance review should not be looked at as a hurdle, and if it's the architecture constraint that keeps us out of trouble downstream. So that's how I would look at it.
That's wonderful. And I heard a couple of times you said something about humans. Safwan, I'm coming to you. Is AI
Mhm.
coming for my job? Because that's like the number one question that I get from people when I do these types of panels and these types of engagements is AI coming for my job? How do you balance giving AI room to work with keeping humans in the loop? Where do you draw those
Correct.
lines?
So, yeah, absolutely. So let me respond to AI coming for the jobs. We all are figuring this out and living it every day here. And then I respond to the humans in loop because I really like that element. But AI coming for the jobs. Look, during industrial revolutions, when machines started to automate, there was fears that machines is going to take away jobs, but the exact opposite happened, where actually industrial revolutions created new industries, new jobs, and generally made work productive. And I feel AI is going to be the same. AI is actually more of an augmentation versus a replacement. And the way I'd address it is AI is not coming for your job. It's the person that effectively uses AI will certainly do. And as professionals, it's incumbent on us to upskill on AI. And most of us, I'd say, are generally chatting with our favorite LLM model. And that's not upskilling. Upskilling is where you're orchestrating a workflow, using an agent, setting up an agent, and even doing some vibe coding. So to answer your other questions on human in the loop, I don't think that framing is accurate. And I think it's pretty limiting. It limits the potential of the technology and it feels like a big brother looking over your shoulders. The term I really like is humans in control. And I think Meredith mentioned that slightly, where the human judgment is a key piece. And the analogy I really use often is it's like riding a bike uphill, where you're not overly focused on each of your pedal strokes. Rather, you have control of the bike and you're driving it with precision and with accuracy, trying to achieve a destination. So AI certainly, AI and humans are going to coexist. It's more of a control versus humans in the loop.
So, what I'm hearing is that the AI can decide, but a human can override. And Meredith, I would like you to unpack this a little bit. What happens when the human overrides the AI, but it turns out the AI was right? Are you seeing any practical examples of how companies are preventing that from becoming a bottleneck?
So I actually haven't encountered that very often, but I would say, first of all, um, how is that different from maybe a human getting it wrong the first time? So, maybe we consider it a training issue. This might be an opportunity to just, identify those and not only improve our computer models, but also improve our human models. Um, but yeah, it's interesting. I don't know of a lot of cases where that comes up, but I think to Paramita's point, the fact that we recognize it, we have the data, and we can, consider that for the future just means that our systems collectively are going to be that much smarter.
So the challenge that I'm hearing isn't necessarily just about building smart AI, it's building guardrails and policies and practices that are actually workable. And that makes it seem much more like business problems than tech problems. So how do we get this done? What's the practicality in terms of data integration and simply just getting these programs off the ground? AI in payments only works if it has good data and can actually talk to your systems. What does that take exactly? Joe, what data does an AI system actually need to be able to make smart payment decisions? What are our minimums here?
Yeah, really good question. I think there's some themes coming up today, and I think it really comes down to you need to have a combination of predictability, reversibility, and accountability. And so what data enables that? We've got our counterparty identity and history. So think KYC for AI. Is this a known verified vendor with a clean track record? Do they have like, do we know what the risk level is that's tied to this group? Then you've got you got to have a clear authorization scope. Like, what is this business explicitly permitted or the agent to approve, and at what dollar threshold? What are the parameters to keep the risk low? Then we've got the rail context that comes into play as well. So what payment method's going to be used? What are the settlement and the return rules look like? And then finally, what is the anomaly baseline? Like, what does normal look like for this workflow? Because Meredith brought up a couple really good salient points about having that predictability within that workflow, so that the agent knows when to go. Okay, hang on, we need to escalate this to a human. So without those four things, you really got an agent that's guessing or maybe making some decisions that we're not expecting. So the data layer is really going to enable a clean process flow from there.
That brings up a really good point, what normal looks like, but also data quality. So, Paramita, in your organization, is data quality the key problem, or is it more that your systems don't talk to each other, or is it something else entirely?
Yeah, in most organizations I've worked with and advised, it's a combination. It's not just the data quality, it's a combination or a multifold problem. There's the integration problem, there's the data quality problem, and there's also the organizational alignment. And I think the order matters here, right? The integration is an upstream problem. For example, if your ERP isn't passing clean data to your transaction monitoring system, and your transaction monitoring system doesn't pass clean data to the payment platform, then data quality problem is actually an integration problem in disguise. People would say that, hey, it's a data quality problem, but actually it's the integration that's not working. You can clean data up all day long inside one system, but it arrives dirty at the next one because the pipe between them was built in, 2000 by a vendor who no longer exists, and we don't have control over how we clean up those pipes. Data quality as a standalone issue tends to be very scope specific. For example, vendor master data is often a mess. Payment reference fields are inconsistently populated. Counterparty identifiers are not normalized. And these are real problems, but they are tractable. And integrational problems are more structural. The third issue, which is often, the elephant in the room and not talked about always, is the organizational alignment. Data governance in most large enterprises is nobody's job. Business owns the outcomes, IT owns the pipes, the integration, etc. The data sits in the middle and nobody is accountable for its accuracy end to end. But before you can build AI on top of payment data, you really need someone who owns the data contract between the systems and someone that's accountable to make that data available, that clean data available to the downstream systems. So, agents and AI can actually work on top of that.
What I'm hearing in that response is that the integration seems to be more difficult than the data quality. Savon, in your experience, what makes integration so complicated?
Yeah, so in payments and financial services, we're actually operating with a variety of different platforms, whether it's a payment processor, an ERP platform, or a bank ledger, and even risk decisions, where all these platforms were built like in the 60s, not designed to interact with each other. So yes, integration is an issue to Paramita's point, but even graver problem are all these systems that are just not designed to interact with each other. So what's happening is data is actually trapped in all these systems. And more so than integration, it's an infrastructure problem in payments and financial services. And AI is only as good as the data it gets trained on. And before we fix the core issue versus a symptom, AI is not going to be as productive in some of these workflows and use cases that we all want to automate and enable in our businesses.
Interesting that you said core issue, because in my day job, working with a lot of banks and credit unions here in the United States, if I had a dollar for every time somebody had to complain about their core, I would be retired. And I'm sure we have all been
We
there.
all would be, Angela. I think that is a core issue.
So, Meredith, I'm going to come to you. What's the most common thing you're seeing companies underestimate when they try to implement AI in payment systems?
Well, it ties off of the integration question, but I think it's this idea of interdependency. A payment is not just a point event, it's a sequence of events in a chain that all have to happen in order for that payment to have trust, to have that kind of final piece. And so many companies have failed to realize how sequential and how dependent these processes are. So they try and automate one step, but it doesn't really work because if my upstream process isn't complete, I'm only doing kind of parts of the job. So, kind of in summary, I think, AI is kind of forces us to use a systems lens and almost map out everything we do, that's kind of secondhand knowledge in a very systems way. And that's kind of the prerequisite to making sure that the robots can do that for us or can pick it up. But yeah, I think it's you can't just start with one tiny kernel in the middle of a chain. You actually have to think end to end.
That's definitely a theme that I've been picking up on that everybody has touched on today is that this is not one problem and AI is the problem. It is multiple problems that are all stitched together. The three that I'm hearing the most commonly from all the speakers is data quality, system integration, and people being educated on how to use it. And I think those things all together make it take a lot longer than people would think to innovate with AI and financial services. And I think that's the most, we're getting to the part of the show that I'm most excited about, which is what should we do now? I think it's always important when we talk about innovation in financial services to have practical takeaways. I think we've all been there where we listen to somebody talk about an innovation and we think, that's great. And now what do I do? What am I supposed to do when I take this back to my teams? So we're going to kick it off. If you're a CFO or you're a treasurer listening to this, what should we do? Where should we start? What's the first move? And Joe, I'm going to come to you first on this one. If you were giving someone advice, what would you tell them to do first?
Yeah, I think I would start with something basic like an end-to-end workflow on invoice to payment on known vendors only. And the reason why is that that's what creates that level of predictability. At Blaze, we call it crawl, walk, run. You can't get a baseline without understanding how to build a repeatable model and expand from there. So I would start with that crawl first. Um, what would you need to do that? Well, you need to know who the counterparty is. They've got to be underwritten. There's got to be a relationship there. You need to know the amounts and the cadence. You need to know that you're automating a workflow that already exists to Meredith's point about, having something end to end that you really understand, and not inventing a new one real time because that's not going to serve you well. And you also need to know when something goes wrong, you got a relationship, you got a known vendor to resolve it through. And so I think those are key points. Start simple, crawl first. Um, don't start with net new vendor relationships, and don't start anywhere your ERP data is messy or incomplete. Get one clean, low risk workflow running well, prove the model out internally, and then expand from there.
That's great. Paramita, do you have anything to add there? Additional advice that you would give to a team that's looking to implement some of these solutions?
Yeah, I think it's on the same lines that Joe mentioned. I would say that first you have to kind of take a basic one and get it running, and then you kind of move on. Maybe, the other contrarian view that I might take is start with your exception queue because exceptions might not be huge. The pile of invoices that did not match, or the payments that got flagged, transactions that need manual research, and you're not putting it out to the customers just yet, but that queue is the AI training set and the first use case simultaneously. So it's already identified as very high effort, and it has high value, it has outcomes attached to it, and the humans who process it are exhausted. So maybe start with that, just taking a contrarian view here again.
Safwan, I'm coming to you next. What
Yeah.
would you say to add to the conversation?
Yeah, I agree with the previous two panelists, and I'd add, some of the workflows that are ripe are ones that are predictable, high frequency, and can operate with clear guardrails. I think the biggest mistake is where organizations are trying to use AI to automate everything. So you're trying to eat everything without having perfected a use case. And as part of perfection, I like Paramita's suggestion on starting with the exception use case. Actually, in my current role, we've started with all the manual AML investigations that fell into the queue of the CRA officer or the BSA officer. So starting something from there where the team starts to look for clear ROI and use case and not trying to tackle all use cases is clearly a suggestion I'd give, whether it's a CFO or a CRO or even a COO. So starting small, learning, adjusting your operating procedures, and then scaling from there.
And Meredith, from your perspective, what signals to you that a company is actually ready to do this? What does readiness look like?
Oh, I maybe am colored by a lot of the leaders that I work for, but I think everyone has to be ready now. AI is coming to us so fast that readiness is more of a mindset that we bring to it. We have to be willing to try and look at every component of our process and be approaching almost how do I use AI to do something with this, even if we don't necessarily know right off the bat. Um, I think, maybe to the point that some of the other panelists have made, if you can start with those high friction, high cost cases, it's going to be a lot easier to build organizational alignment to driving that change, which can be another kind of obstacle to readiness. But the reality is this world is coming upon us so quickly that for all of us to be competitive and upskilling and ready to continue performing, for the future for our companies, we all have to be trying every day to be working this into our day to day. Ready or not.
Ready or not, here we come. It is here. Paramita, I wanted to go back to something that you said a few minutes ago when you were talking about the disparate systems and the data quality being essentially a nightmare. I'm paraphrasing, obviously, but I'm curious from your perspective, how long does it take to clean up the data? Is it months, years, lifetime?
Really great question. And it depends on where you are starting from. And here is how I would pan it out. So let's say and this is more of like a realistic range that I have in mind. 3 to 6 months, you have your data audit, your counterparty normalization, your outcome labeling for a single workflow, which is achievable with a dedicated cross-functional team of 3 to 4 people. And this gets you to a point where you can run a pilot on one use case. Enterprise grade data infrastructure that supports AI across multiple payment workflows takes more like 12 to 18 months. So if you were planning that as an organization, start now. And this would include integration engineering, data governance structure, model risk framework, regulatory documentation. And this is the full build. The honest answer is that most large enterprises are close to 12 to 18 months than they want to admit. People will say that, hey, I will be ready in 3 to 6 months, but not really. You don't have to wait for the full build to start generating value. The 3 to 6 month scope is real and it produces real ROI. The key is scoping tightly, picking the workflow, and getting to production on that before expanding. What makes this go faster is if there is an executive mandate with dedicated resources, a pre existing data governance function with authority across systems, and a technology stack that has modern API connectivity and not like legacy infrastructure. What would make it go slower is if there is fragmentation internally within the organization, legacy systems with no API layer and data ownership disputes. The technology is rarely the gating factor, actually.
Interesting. Okay. That was not the answer I was expecting, and I actually really liked it. And we did get a question from the audience for all of our panelists. I'm excited to hear what you all are going to share next. Over the next 5 years, what is one structural change agentic AI will bring to B2B payments that you believe the industry is currently underestimating, and why?
Oh, yeah. I'll start because I mentioned this use case. I truly believe it's in the vendor payments area where agentic AI is actually researching vendors, negotiating, comparing prices, and then has a set budget, and then essentially deciding whether to pay or not, while the businesses are just focused on their core business activity without having to do everything via email, phone calls, and paper. So I truly believe that's a game changer.
Yeah, I would agree with that. Agentic commerce is where I think, it's not there yet, but in the next 5 years, it's coming up soon. Extending to what Safwan said, making decisions on behalf of the client, and where for us as payment professionals, it becomes important is how do we make sure that we know the agent. Today we do KYC for our customers, but how do we incorporate KYA for the agents, making sure that this was the agent that's actually created or authorized to make payments on behalf of the client, and it's making, and how long does that authorization stay? How do we know your agent, redo a KYA for the agent? Those are still the ones that we would need to figure out, but agentic commerce is picking on us very soon.
Yeah, I think from a structural standpoint, I think it's going to force more standardization of data sets across different vendor relationships, different rails. I think that's really from a structural standpoint. I think that's the next big move is we're all going to have to be speaking the same language in order to operate quickly.
And I think maybe what I'm most excited about with these innovations in the next 5 years is I do think, kind of touching on a structural component, we're going to see better incentive alignment on both sides of transactions. If we look back, or at least in B2B, what we see often is the larger, stronger vendor or payer determines everything else about the process. And that does create a lot of constraints for the smaller parties working with larger parties. But if we have agents and we have optionality on rails, on time, on the data that's associated, programmability on if you include these things, I'll execute on this schedule or speed or price. I think it's going to give companies of all sizes more tools to be able to, again, align those incentives and get better outcomes across the whole supplier payment ecosystem.
I think I'm more closely aligned, Meredith, with especially because B2B is one of my key focus areas, the idea of programmable money and the relationship of like stablecoin and agentic commerce. I think that's going to start getting stitched together in the next 5 years. And to the multiple of the panelists' points, it is going to be transformative in terms of like price negotiation, contract negotiation. It's, in my opinion, I think going to take the entire factoring side of the ecosystem and completely flip it on its head because we're going to have better data passed back and forth between vendors and suppliers. And I mean, we all saw what happened in 2020. It was kind of a disaster with all these manual processes. And now we're 6 years later coming up and saying, okay, what else can we do to make this better? Because that was a mess. And I think we're glad we're not there anymore.
And Angela,
Um,
you touched, if I may add, you touched on
yeah.
a very important combination, which is stablecoin and agents together. And I think we're underestimating the power the two are going to bring to the industries. primarily because agents, if you have give them budgets, are 24/7. They can't be using a fiat currency that gets closed at 4:30 p.m. Eastern Standard Time, and you can't clear a volume over the weekend. So stable coins as a programmable money vehicle that's attached to an agent to do controlled 24/7 payments is certainly the one of the future that I'm actually looking forward to in our industry. So,
Yeah, agreed.
I definitely am. I went down a bit of a rabbit hole with another set of panelists a couple of weeks ago about the Internet of Things and how that is going to work with programmable money movement. And I thought that smoke was going to come out of the ears of the
yeah,
bankers that were sitting there listening to us talk about this because they're,
yeah.
some of them are more community focused institutions that are just now trying to get on RTP network and Fed now in the US. So it was fun to watch their reactions to that particular talk track.
Well, maybe
For the
one final point, Angela, just, AI is such a lightning bolt topic that we hear, but I think we're going to realize, and stablecoin and AI together, I think are going to be an interesting case. There's actually a lot of leakage in our systems that we don't really know about. And it's like, to your point about data, we could actually make better decisions if we all had better outcomes. So I think what we're going to find, yes, like people are concerned, is it going to take my job? But I actually am a huge optimist in that I think we're actually going to raise the bar for everyone and all get better outcomes as a result of this technology coming into our world.
All right. So I'm not seeing any questions from the audience, but I did want to close out with a lightning round for the panelists because we've covered a lot of ground in 30 something minutes this morning. And I know that I definitely learned a lot from what we were sharing. So lightning round question to wrap up. What is one key takeaway that you want the audience to hear from you on this topic today? And it could be this is something you absolutely have to do, or this is something you absolutely have to avoid. But what is one key thing that you want our audience members to leave today's session with? Paramita, I'm going to come to you first.
Sure. This is my pet peeve as well, and I think people should really focus on this. Don't start with the technology, work backwards from the use case. The best AI in payments implementations I've seen started with a clearly defined problem. We are spending X hours per week on manual exception resolution, and it's causing Y dollars in delayed payments. Everything else flows from there, right? The worst stated would be we want to implement AI in AP and spend 2 years in proof of concept hell. So if I were to summarize, don't start with the technology, work backward with the use case.
All right, Joe, I'm coming to you next.
Yeah, I'm going to piggyback on Paramita's statement because I think that's a really really pertinent one to what I'm going to say, which is have a very clearly defined outcome, but also understand what happens when things go wrong. What is the decision process? How do we reverse an issue? And also, in addition to that, who owns it? Who's accountable for the issue when things do go wrong? I think that's really important to understand that before you have those edge cases pop up, and then it's chaos.
Mhm.
Safwan, you look like you're ready to say something.
Oh, no, I was just nodding to Joe's comment. For me, it's not doing anything with AI. So if you're stuck in analysis paralysis, waiting for the perfect regulatory clarity, waiting for a perfect workflow or use case to scale, and maybe stuck in PowerPoints and Excel on ROI calculations, you're already failing in AI, in my opinion. I think failing is great. Just start with a workflow, learn from it, as we spoke earlier in the panel, and adjust your processes and see the benefits. The risk of indecision is pretty high.
Meredith, close it
Yeah,
out for us. One key
yeah,
takeaway.
I'll maybe be the don't one. on the panel, but I would say don't be wowed by demos. Like this is a data end-to-end workflow, and you really have to measure it by the outcomes. So there's so much flash and pomp sometimes in what AI can do, and it's easy to kind of look at something on a screen, but really it is, it's the underlying data. It's mission critical to your business. Um, take it carefully, and talk to your team to make sure you map it out.
All great key takeaways for today's conversation. I want to thank our panelists for such a thoughtful and grounded conversation on a industry-defining topic. What really stands out for me from today is that AI in payments is not about replacing judgment. It's about improving decisions, strengthening controls, and creating more value when it's applied thoughtfully within real business contexts. The opportunity is real, but so is the need for the right data, guardrails, and human oversight. We've covered a lot of practical ground today. So, once again, I'd like to thank our panelists for their insight, candor, and the perspective you shared today. And I would also like to thank everyone who is in attendance. As we bring Next Gen Payments cross border innovation to a close this morning, I want to give a sincere thank you to all of our speakers and for sharing such practical, relevant, and forward looking perspectives throughout today's event. What today's conversations have made clear is that cross border payments are entering a new phase, one shaped by smarter infrastructure, stronger interoperability, better customer expectations, and a growing need to connect innovation with operational reality. To all of our attendees, thank you for being a part of the discussion and for your engagement with your questions. Your participation helped make this a stronger and more valuable conversation for everyone involved. And a special thank you once again to Paystand for bringing this entire event together. We hope today's sessions have given you useful ideas, practical takeaways, and a stronger sense of where cross-border payments are heading next. Thank you all for your time and attention, and we hope to see you at a future TechSommet event.
Thank you.
Thank
Thank you.
Appreciate it. Great to see you guys.